Everyone was in a state of panic. In 2008, as the entire world economy was collapsing, this 78-year-old man quietly placed a $5 billion bet. On the day Wall Street was struck with terror, Warren Buffett was executing one of history's greatest investments. But this story didn't start in 2008. It all began when an 11-year-old boy bought his first share. That boy was Warren Buffett, who today ranks 6th on Forbes' 2025 billionaires list. So how did he stay successful for so long? His secret was simple. Compound interest is the eighth wonder of the world, he'd say. He'd turned Einstein's words into his life philosophy. But there was something he didn't yet know. How this simple investment philosophy would make him billions of dollars in history's greatest financial crises. Today, Berkshire Hathaway's portfolio value is $354 billion. Apple shares alone, $174 billion. How was this possible? 1942, Omaha. 11-year-old Warren bought Citi's Service preferred shares with his sister Doris, using his saved $114. He paid $38 per share. They'd bought 3 shares in total. Buffett described his feelings from that time. My stomach was churning. I was checking share prices every day. This was my first panic attack. A few days later, the shares dropped to $27, 29% loss. Doris was yelling at Warren in panic. "We've lost our money!" But Warren was trying to stay calm. His mum had told him, "Warren, investing isn't gambling. You need to understand the company's value." What would you have done? Most kids would have given up. But Warren was different. Months later, when the shares rose to $40, he sold. $5 profit in total. But there was a gnawing feeling inside him. Could he have made more? Years later, when he learned the truth, he was shocked. Those shares had risen to $200. If he'd never sold that $114 he'd bought in 1942, this investment would be worth $2.3 million in 2025. That night, he tossed and turned in bed. Patience. Patience is everything. This painful lesson changed him, but he didn't yet know that this simple lesson would soon prepare him to make billion-dollar decisions. 45 years later, a phone would ring in an office. October 1987, Black Monday. Markets dropped 22% in a single day. Wall Street went mad. Brokers were screaming. Investors were flooding sell orders. Everyone was running. But that familiar spark was in Buffett's eyes. He'd sat alone in Berkshire Hathaway's boardroom. Before him were Coca-Cola's 10-year reports. He was turning the pages one by one. The numbers were speaking. "Look at these figures," he murmured to himself. $4.8 billion in sales in 1977, $7.7 billion in 1987, 60% growth, profit margins rising, debt decreasing. He stopped, put down his pen, looked out the window. And most importantly, this company is consumed by 1.7 billion people every day. The same taste everywhere in the world. This isn't just a beverage. His eyes lit up. This is global addiction. Early 1988. He picked up the phone, called his broker. "Buy Coca-Cola shares." "How much, Mr. Buffett?" Buffett took a breath. $1.3 billion. Silence on the phone. No one spoke for 10 seconds. The broker's breath caught. This was 7% of Berkshire's total value at the time. On a single company. "Mr. Buffett, are you certain?" I said buy. News hit Wall Street. Television was debating live. Has Buffett gone mad? He's put that much money into Coca-Cola. Experts were yelling, Pepsi competition is increasing. The cola market is stagnant. This is suicide. But they weren't seeing something. Buffett had seen it. At that time, liberal economic reforms were starting in China. Eastern Europe was opening up. Billions of new customers were waiting at the door. But no one was even looking. That night, Buffett smiled as he drank his cherry Coke. They'll understand in time that $1.3 billion is worth $25.8 billion in 2025. 1,985% return in 37 years. But the real miracle is different. The annual dividend he receives from Coca-Cola in 2025 is $736 million every year. More than half his initial investment just coming into his pocket as dividends. Wall Street finally understood. Buffett was right, but by then, Buffett's eye was on another opportunity. The apocalypse coming in 20 years. September 2008. The day boxes were being carried out of Lehman Brothers offices. Warren Buffett, 78 years old, was sipping his cherry Coke in his Omaha office, watching the news on television. AIG was sinking. Bear Stearns had vanished. Merrill Lynch had been forced sold. The phone wouldn't stop ringing. Investors were calling in panic. "Warren, let's pull our money out. Everything's ending. This is worse than 1929. Buffett answered in a calm voice, "Remember where your money is, in Berkshire." And Berkshire's going shopping. The VIX, Volatility Index, fear gauge, had jumped to 89. Normal level is 20. The Dow Jones had dropped 54%. This was the highest fear level in market history. Everyone was selling. Buffett was calculating. Goldman Sachs' shares went from $250 to $52 in 12 months, 79% loss. He removed his glasses, rubbed his eyes. But has the company's fundamental value changed? Number. There's only fear. He read the framed quote on his desk. "Be fearful when others are greedy, and greedy when others are fearful." He smiled. "Right now, everyone's scared. This is my time." 23 September 2008, 14:30 hours. The phone rang. "Mr. Buffett?" "Lloyd Blankfein, Goldman Sachs CEO. We urgently need your help. We're experiencing a liquidity problem. If you show you trust us, the market will trust us too." Buffett didn't hesitate at all. "Lloyd, listen to my terms. This isn't charity, it's business. My business is making money." The terms were harsh. $5 billion investment, 10% guaranteed annual dividend, risk-free treasury was 2%. Rights to buy Goldman shares at $115. Market price that day was $125. These terms unchangeable for 5 years. Lloyd hesitated. "These terms are very harsh, Mr. Buffett." "Lloyd, do you need me or do I need you?" Silence. Accepted. When the news spread, markets froze. Everyone locked onto screens. Buffett trusts Goldman. That day, Goldman shares rose 6%. Other banks followed. Bank of America 4%, JP Morgan 5%. Buffett's single move had solved the entire sector's confidence problem. One man's name had calmed a multi-trillion-dollar market. Financial media. "This is too risky." Buffett laughed on television. "Where's the risk? Guaranteed dividend. Low share price. If Goldman collapses, the whole system collapses. Then my money's worthless too. No risk." That $5 billion investment returned $8.7 billion in 4 years. 74% net profit, whilst the world was collapsing. This move didn't just make Buffett money, it also contributed to all of America's economic confidence. But the old master had another surprise in his pocket. No one could guess. 3 days after Goldman, the phone rang again. "Warren, Jeff Immelt, General Electric. We're going through the toughest period in our 130-year history. They're going to lower our credit rating. We need your support." Buffett took notes. "Jeff, GE's fundamentals are solid. It's just a liquidity problem. But my terms are the same. This is business, not emotion. $3 billion investment. 10% annual dividend. Rights to buy shares at $22.25. 2 giant moves. $8 billion in 1 week." Markets breathed. Buffett's name was now like a security certificate. Result? $1.2 billion profit from the GE investment. 40% return in 3 years. Wall Street relaxed. Buffett's done it again. Crisis over. Now he'll prepare for retirement. But they were wrong. 2016. Buffett's 86 years old. At the Berkshire Hathaway meeting, someone asked, "Mr. Buffett, why don't you invest in tech shares?" Buffett gave his usual answer. "I don't understand technology. I don't invest in Microsoft, Google, Amazon. I don't enter business. I don't understand." But that night in his office, he was thinking about something. He opened his iPad, looked at his iPhone, remembered his grandson constantly looking at the screen. Wait a minute. He sat at his desk, opened Apple's reports. Is this a technology company? He turned the pages. No, this is a consumer brands company. The next day when his grandson came, he tested it. If I gave you $10,000, would you swap your iPhone for a different phone for a year? His grandson was shocked. "Grandpa, what are you saying?" "Never." Buffett smiled. He asked friends, family members, employees. 90% gave the same answer. No. That night, he understood. This is stronger addiction than Coca-Cola. Apple's not just selling phones, it's selling ecosystem. Once you're in, you can't get out. App Store, iCloud, AirPods, Mac. They all feed each other. Perfect trap. First quarter of 2016, he bought $1 billion worth. Tested it. Second quarter, $4 billion. It worked. In 2017, $16 billion. In 2018, $15 billion. Wall Street couldn't believe it. Is Buffett learning technology at 86? Total $36 billion investment. Berkshire's biggest bet in history. Current Apple position, $174 billion. 383% return in 9 years. Apple alone makes up 49% of Berkshire's portfolio. But the story didn't end. From 2022, he started selling half the Apple shares. Why? Simple. Price rose too much. I'm a value investor, not a momentum investor. Sale value, $75 billion. He got back more than double his initial investment, and he still has a $174 billion position. A 94-year-old man continues to amaze the world. 2025. Buffett's 94 years old. Every morning he wakes at 5:45, reads 5 newspapers, gets breakfast from McDonald's at 6:30, 2.95, 3.17, or $3.25, chooses based on the market. Savings still important. Berkshire Hathaway's market value is $874 billion, one of America's most valuable companies after Apple. His top 5 investments: Apple, $174 billion, Bank of America, $31 billion, Coca-Cola, $26 billion, Chevron, $19 billion, American Express, $15 billion, still living in the same house. The Omaha house he bought for $31,500 in 1958. Same neighbors, same street. Happy. Personal wealth, $118 billion. Daily expenses less than $10. His car is a 2014 Cadillac XTS. No private jet. Giving pledge promise, he'll donate 99% of his wealth. So far, he's donated $57 billion. Thanks to the Gates Foundation, 25 million children have been vaccinated. 130 million women gained access to birth control. 50,000 students received scholarships. 7 golden rules. Invest in businesses you understand. Hold for minimum 10 years. Crisis is opportunity. Be patient. Be brave in times of fear. Separate price from value. Look at management. Since 1965, Berkshire Hathaway's annual return is 19.8%. S&P 500's annual return is 10.2%. If $1,000 had been invested in Berkshire in 1965, it would be $43.5 million today. If the same money had been invested in S&P, $320,000. Greg Abel is 62 years old. CEO successor determined. Berkshire's next 30 years planned. 90% of Buffett's wealth was made after age 50. Because the power of compound interest explodes in later years. His final words are simple. The secret to wealth isn't making money quickly. It's investing long-term in the right companies and waiting patiently. Time is the best mate of quality investments. If it were you, could you be brave when everyone's selling? Could you make that first mistake like 11-year-old Warren and learn from it? Which principle will you apply to your life? And the final bombshell. Buffett's cash position in 2025 is $189 billion, the highest cash level in history. Why is he accumulating? Is the 94-year-old master seeing something again? Is a new crisis coming? Or has he found a new apple? Time will tell. But one thing's certain, Warren Buffett's waiting. And when he waits, something big happens.